Okay, good afternoon, everyone. I've got about 20 seconds after 3 o'clock, so I think we should go ahead and get started. Today's webinar subject is PPP, our Paycheck Protection Program forgiveness. And this is the topic we've all been waiting for. So just to give you a little bit of background on logistics, I'm not going to take long on the front end introduction. As in our webinars in the past, you have a tab at the bottom of the screen for Q&A. Start to type your questions in during the webinar, during the presentation, and we will try to answer questions as we move through the presentation. And we will also repeat and answer those questions live as we move into the back-end Q&A period. This week, we have just the three of us on the webinar, Steve presenting, and Terry and I here, me facilitating the presentation, and Terry available to answer questions. Our entire subject is going to be focused on PPP forgiveness. So with that said, I'm going to turn it over to Steve because he's got an awful lot to share today. Steve, take it away.
Thank you, Marquita. I appreciate it very much. Well, folks, the forgiveness application form is in. So we're going to spend the balance of the presentation going over that, and then open it up for your specific questions and be able to provide you a little bit of coaching on how to fill this out. So just to cover our agenda, as you can see, it's pretty clean this week, and we'll get right to it in just a minute here. I want to start with a couple of updates that we had talked about last week. First and foremost, the safe harbor was extended to all borrowers with a loan principal amount of less than $2 million. So practically, what does that mean? That means if you received a Paycheck Protection Program loan in the amount of $2 million or less, you are not in fear of being audited. The Department of Treasury and the SBA has said that all of your representations were made in good faith, and they are not going to audit any of the loans under $2 million. So just wanted to reemphasize that, because there are also some additional safe harbor provisions that we'll deal with in the forgiveness application. And the fact that your certifications are the ones that they're relying on are really important for you to understand. The other thing is, for all borrowers that received more than $2 million, the safe harbor was extended to them until May 18th. So they did have until this past Monday to be able to turn in their funds if they were able to access funds elsewhere. And according to news reports, there were companies that took advantage of that safe harbor. So big question that we had received before: is forgiveness reduced for laid off employees who won't return? And we're going to come back and answer that. We touched on it last week. We've got clear guidance from the SBA this week in their application, and we'll come back and talk to that specific question. The bottom line is no, but you must have a written record of it, and we're going to show you exactly where that applies on the application. So just to review, use of funds, date of disbursement. We told you last week that that was going to be a critical date. Turns out in the loan application form, it is a very critical date. We also told you last week that they're going to be using the 8-week period following loan disbursement as your forgiveness basis. And that is true. They call that the covered period, but they also allow for an alternative covered period. And we'll deal with that in the topic as we dig further as well. Payroll costs are exactly as we had shared with you before. The facts have not changed in that regard, and we're going to walk you through exactly how you make those representations on the form. And then utilities. Utilities are included, and they have defined exactly what utilities mean. So we've had a couple of questions in the past about what does utilities cover, and we will answer that question for you today. Rent and lease. Rent and lease has now been extended to real and personal property. So if you're renting or leasing equipment for your business, there is the opportunity. If you've got a lease schedule that you can attach, there is the opportunity for you to include those payments as well if you need that. And then finally, we had told you before it was interest on existing debt. Well, they've really clarified that. And they say now in the loan application, it's interest on mortgage debt, but mortgage debt for real or personal property. So real property would be the building and real estate. Personal property might be a piece of equipment or other other large fixture that you're paying payments on, and have an amortization schedule that you can demonstrate for proof of the interest portion of it. And we'll show you where that is on the application as well. So forgiveness, how does it work? We were wrong last week. We told you last week that we thought it was going to be a two-step process. Now we can see that it really is a four-step process. And I'll walk you through each of those simply here, and then we'll dive into it a little bit deeper. The first step in the process is to complete what's known as Worksheet A. Worksheet A's got two tables attached to it, and we'll pull those up and walk through those in a couple of minutes. The first table is where you put all of the payroll information, and you've got to do this, you've got to detail it by employee for all employees that are compensated at the rate of less than $100,000 a year. Table 2 is for all employees in your organization that would be compensated at the rate of $100,000 or more per year. So they've broken up the Worksheet A into two particular tables. And again, we're going to dive into that in a couple of minutes. After you get through Worksheet A, the next thing you're going to want to attack is what they call Schedule A. And Schedule A is another series of calculations and questions. After you finish Schedule A, then we recommend you move on to the PPP loan forgiveness calculation form. And the reason you want to do it in this order is you're going to need information from Worksheet A to complete Schedule A. And then once you have Schedule A completed, you'll have basically the majority of the information that you need to complete the PPP loan forgiveness calculation form. So while the instructions don't tell you to do it in this order, we've gone through these forms in detail, and we can tell you this is the shortcut, if you will. Start with Worksheet A, move on to Schedule A, and then do the forgiveness calculation form. And then finally, after you've got it all complete, there's a page called the borrower certification. And this is a page of statements where you're going to have to put your initials next to each statement, verifying that each statement is correct for your business. And then that's the statement that you'll actually sign. So I'm going to give you a quick overview on Worksheet A. There are 4 different alternatives that are available to you on Worksheet A, and you've got to make some choices. The first choice that you have to make is, are you going to use what's known as the covered period, or are you going to use an alternative covered period? And this is important because, let's say for the sake of example, you received your funds on a Wednesday. So your disbursement date was Wednesday and your payroll ended on Friday. Now, you do have the ability to begin the covered period, which would be on the day you received funds, but you also have the option of using an alternative covered period. So you could say, I don't want to use my PPP funds on the payroll that's being paid on Friday because that was for the period that was worked before I received the funds. So then what you can do is say, I'm going to use an alternative covered period, which is the next payroll period after you received your funds. So if you received your funds on Wednesday and your new payroll period begins on Saturday later of that week, then you can use that Saturday moving forward as your alternative 8-week covered period. You will have to detail your payroll per employee, and it asks you not only to name them, but also to provide the last 4 digits of their Social Security numbers. Now, what we've heard in talking with a lot of different payroll companies is that if you use an outside payroll provider, they will, in all likelihood, be able to give you a report that is formatted specifically to address the PPP forgiveness. So if you do it yourself or have a provider that doesn't provide that report, it's really not that hard, and we'll walk you through how to do that as well. The next thing you're going to need to do is measure the full-time equivalency. Now, there has been a lot of talk about this, and the form does have a clear methodology for doing so, but this is again where it gives you the right to choose between method A or method B, and I'll illustrate that for you in a few minutes. But really what you're trying to determine here is if an FTE reduction applies, what they call the FTE reduction quotient. So a portion of your forgiveness could be reduced if your FTE number was reduced significantly from when you made application to when you're seeking to make forgiveness application. There is also a potential deduction for salary and wage, and we had suspected that both of these were going to come into place, and they both have. So there is a special set of calculations that are done to determine whether or not you reduce the wages of the employees within your organization by 25% or more. And there's what they call the salary wage reduction safe harbor, and we'll talk you through that process as well. So just want to reemphasize that once you get all the calculations done and your application filled out, the borrower is going to self-certify. You will have to provide a lot of reports and attachments. We're going to walk through each of those. We were pretty close with these. This is a good summary, the ones that we had given with you last week. There's some additional clarification. We'll talk about that in a minute. And then I just want to remind you that the lender's decision is due back to you within 60 days of making application for forgiveness. So let me move over to, indulge me 1 minute while I change the screen, and I'm going to move over to the application format. So just a quick reminder. I was talking with our team earlier, and I was saying I think maybe a congressperson actually wrote the application form because it's so darn simple. There were only a few boxes to fill out. You had to just figure out what your average monthly payroll is, multiply it by 2.5, and then write in the box the total number of employees that you had. Pretty darn simple application process. Well, unfortunately, the loan forgiveness application is not quite as simple, and it's actually 11 pages long, and it will be attached to this webinar. So if you haven't received it yet, you will get it as a portion of the replay that we send for this webinar. So the 11 pages includes all of the instructions, and I'm not going to read you all the instructions, but I want to highlight a couple of key things. So first off, we had talked about the covered period. The covered period is the 56-day period that begins on the day that you received your loan disbursement date. So that is one option. When you're filling out your forgiveness, you have the option of choosing between covered period or alternative payroll covered period. And it says alternative payroll covered period because you can then move forward to if you want to align it with your payroll period. So you can move it forward into the beginning of your next payroll period and then start the 56-day clock from that point forward. If you do so, you must apply it wherever there's a reference to the covered payroll period or alternative payroll period in the application, and we'll point a couple of those out. There is also a box that you check, even though you're putting on the application the amount of your loan, there is a box where you check whether or not you've received in excess of $2 million. So let me walk you through a couple of the deductions and a couple of the explanations that they put in here. We talked earlier about business mortgage interest payments, and I just want to highlight that they have defined that as any business mortgage obligation on real or personal property incurred before February 15th, 2020. So you couldn't go out and buy a piece of equipment with the money and then claim the interest on that. But if you had existing obligations that were in place by February 15th, those would apply. It does not allow you to do prepayments, but you can use any of your business mortgage interest on real or personal property. And then for utility payments, I also want to call out that you must have had the service before February 15th as well. So this was a little bit of a curveball that we didn't expect, but it is in the instructions here. So that means that you couldn't have established a new service and then gotten reimbursed for that initial two-month period of time. Let me move on into eligible payroll cost. Now, eligible payroll cost is during that 56-day period, and the payroll costs are considered incurred on the day that the employee's pay is earned. So that's a little bit different. So if you're using an alternative in order to make it coincide to your actual payroll periods, that's a convenience for you. But remember that even if the payrolls don't match up exactly to your 56-day window based on the disbursement date, payroll is considered on the date that it is incurred when the employee is earning the payroll. So keep that in mind. And then I want to emphasize on the non-payroll costs again. They just said again down here, it's for rent obligations pursuant to lease agreements for real or personal property. That's another addition that we didn't see before. So if you have rental or lease agreements that were in place by February 15th for not only the building that you're in, but maybe pieces of equipment within your business, those would also apply. We mentioned earlier that they defined utilities, and you'll see that here. Utilities are defined as electricity, gas, water, transportation, telephone, or internet access. And again, the qualifier of the service had to be in place by February 15th. So we've had lots of questions on this before, and this definitely clears it up for that regard. And just remember that they emphasize that your non-payroll costs cannot exceed 25% of the total forgiveness. So let me go down and just share with you the loan forgiveness calculation form. So if you'll remember, the borrower application was basically this. The whole loan forgiveness calculation form is a full page. And it asks you for a lot of information. They're asking you for information, but it doesn't factor into the calculation. So they're asking you for your PPP information. They're also asking you for your EIDL information. If you've received an EIDL advance, and they also want your EIDL application number, but it does not affect a reduction of your forgiveness. Here is where you make the selection, whether or not you're using the covered period or the alternative payroll period. And then down below, this is the bottom line calculator where you're filling in the aggregate amounts from the various tables and schedules to arrive at what is your forgiveness amount, what is your total forgiveness amount. So all that's on the front page of the application. The back of that is actually the certifications where you will actually initial each of the boxes and then sign down below, and that's basically your application form. So let me move into some of the schedules. There is a whole set of instructions on the schedules, and just to hit a couple of other high points on the payroll periods, remember that you can also include the employer contributions for employee health insurance, for employee retirement programs, for the employer portion of state and local taxes, and the payroll, of course, for any owners of the business that are involved in that as well. So there is a PPP worksheet, Schedule A, and as you go through it, you'll see that it references that you've got to pull in information from the various tables. So again, you're basically doing the back end work of all the calculations that are on the front page of your application. And there are good instructions in each of these areas. The most complicated of these relate to the safe harbor and the FTEs. And you know, again, I think they gave this application form over the people that write tax forms every year because it is somewhat complicated to dig through. But here are the schedules, the tables that are included in each one. And basically you've got to complete a table, table 1, which is for all those employees in your business that are earning less than or equal to 100,000, or table 2, which is all those that are earning more than 100,000. And what you've got to list is the employee's name, the last 4 of their social security number, what the cash compensation of their total pay package is, and then you will do the calculations that determine where they fall as an average FTE, and then where they fall as it relates to salary and hourly wage reduction. And there are several pages of instructions and worksheets on how to do this. But not to worry, folks. We actually have got a simplified document for you. So one of the things that you guys will be receiving if you go to the replay of this document, we'll have all the attachments there, is IBA has completed a modified Schedule A for you. And basically what we've done is we've taken the Schedule A and all the instructions and laid the information out in a table format for you. So for each employee, you can do the calculations, and you can see it's somewhat extensive, but every one of these light blue shaded areas, the calculations are actually done for you. So you only put data in the white cells. So it's really not quite as calculated as you might think, and it auto sums up. The beauty of this is, remember I told you you've got 4 choices that you've got to make. The first is you've got to choose between the covered period or the alternative covered period. And you do that before you start working on the worksheets. But one of the things that we would offer to you is you might want to run this worksheet based on both methods. So you might want to run it on a strict 56-day covered period, and then do a separate worksheet on the alternative covered period and figure out what works out best for you if there's any difference between the calculations. The other choices that you get to make is how you calculate the average FTE. So there are 2 ways to do that. One is a mathematical calculation where you figure out what percentage of 40 hours per week did a part-time person work for you. So if you've got somebody that's working 20 hours a week, that would obviously be 0.5, when you do the math of 40 divided by 20. So you can do this calculation to figure out what the exact percentages are for your part-time people. And if you have a lot of part-time people, we have found that it can make a significant difference in our practice models. So if you have more than a few part-time people in your organization, we would encourage you to run the model 2 ways. First off, do it with the mathematical calculation. The other option that the instructions give you is you can choose to either allocate your FTE based on a factor of 1 or a factor of 0.5. So basically what you're doing is you're adding up all of those average FTE numbers, whether it's 1 or a 0.5 or a fraction of 1, and coming up with what is your total FTE for your company. If you have a lot of part-time people, it's in your best interest to run the calculations both ways and find out what works best for you, because both ways are allowed on the application, but they deliver 2 different numbers, which will factor into the percentage that is forgivable. So it's important to take a look at that. Again, the worksheet that we've compiled for you, we recommend you use it as a scratch sheet. You can fill in the tables. The tables are linked so that various portions of it, if there's a light blue box, that comes in from another portion of the table. So we recommend that you start with the Schedule A Table 1, then do Schedule A Table 2, then go do the Schedule A itself, and then finally all of that rolls into the application. And you'll see that on the application, of the 11 boxes you got to fill in, 8 of them come from those other schedules. So that just goes back to, how you want to spend your time doing the application. So again, somewhat complicated, and it does require a lot of information, but we've got some tools that we hope will make your forgiveness application much easier.
So Steve.
Yes.
I know we had said we do questions on the back end, but I'm going to throw a question at you right now. And I'm asking this question a little bit tongue-in-cheek, but, there are many of us who just really like to take some documents and throw them in a file, a manila folder, and send them to our accountant. And the magic happens relative to taxes, and that is producing our tax returns at the end of the year. I know that there are probably people in the audience who are saying, oh my God, do I have to go find these numbers and transcribe these numbers? What do you recommend for people who are more that, pass the shoebox to the accountant or pass the manila folder to the accountant kind of people versus the ones like you who love to deal with the numbers? What are your thoughts?
Well, I think again, you're going to have to make four choices. You got to first off decide whether you're going to use the covered period, the alternative period, and then how you're going to actually do the calculation for the FTE. So it's it's fine to give it to somebody to have them do that. If you've got an accountant that can provide that service, and if you're using a payroll company that's giving you the forms, they may be giving you good information by which to just plug in the numbers and go. Um, but I would make sure that they are running the alternatives for you, because in the examples that we've run there, it does make a difference. The way you calculate FTE, if you have a lot of part-time people, it will make a difference in the way your forgiveness is calculated. So that's why we built the sample sheet, so you can kind of play with it a little bit. And if you're one of those people that's going to be right on the line, you definitely want to run the numbers to make sure which is going to be most advantageous to you.
Okay, and I'd also like to take a minute now to encourage all of our participants, begin to type in your questions. We want to see what you want to hear in terms of detailed questions. I think we've heard enough from Steve now to start to formulate questions. So Steve, take it away, keep presenting, and hopefully we'll see some questions pop in here shortly.
Okay, the next major thing I just wanted to point out was the documentation. So they have given in typical government fashion, they've given you a whole bunch of documentation guidance as well. What they are saying is there's some requirements, and then there are some things that you can do at the election of the borrower. The first thing they've said is bank account statements or third-party payroll service provider reports. Those would be important for you to be able to illustrate how you have used the funds to do that. Tax forms, which we had talked about before, your 941s and your state filings for your employment taxes, and then payment receipts, canceled checks, or account statements from things like your utility provider and so forth. If you're using the interest deduction for real or personal property, they also recommend that you put copies of those rental or lease agreements in there, or the amortization schedules from your loan documents that you have in there as well. They've got a whole series of documentations that you can provide at the election of the borrower. This is all related to the FTE stuff. And I'm going to guess that probably this is going to be up to the lender. This is going to be up to the bank. The bank may tell you exactly what they do or don't want to see. And then finally, there's a whole bunch of different documents that they say that you must maintain, but you're not required to submit. So pay attention to this list. It's a full page at the back of the instruction sheet, and it's quite comprehensive. So that's kind of it in a nutshell, and it's a lot to take in, I know, and we ran through it very, very quickly. But Marquita, have we got any questions that have come in?
You bet we do. Okay, so this question relates to the threshold requirement for 75% of the forgiveness to be payroll cost. Okay, the first component of that question is, what calculations take place, or what happens if payroll is less than 75% of our loan amount? So the forgivable payroll calculates to be less than 75% of our total loan amount. What happens then? And then the second part, the corollary to that is, if we're under 75% and we can forecast that we're going to be under 75% of our total loan amount in payroll, does it make sense to give a bonus to any or all employees to hit that 75% threshold?
So there is no provision for you to report a bonus. So they're not asking you what the components of your employee's cash contribution is. They're only asking you for the amounts. That's an important distinction. They're not asking you what makes that up. Is it made up based on a bonus or overtime or sick leave or family leave or anything like that? They don't ask you that. They just ask you what the dollar amount is for the compensation. So I would say if you're close to that edge number, and you need to pay somebody a little extra to get yourself over that edge, keep the backup information for yourself. You don't have to report the backup information, but you do need to report, the cash compensation. I think I would be prone to make up the difference.
Okay, good, good. Next question from Christina. What is the best way for a business owner to document payroll for themselves when they take a draw, a member draw?
Yeah, just cancel check. So they're not going to have, they're not really going to have anything else, but you can use cancel checks or payment receipts here. And a payment receipt typically wouldn't apply in that, but they would write themselves a check. And they're going to have to highlight it as that.
Okay. I want to quickly go back to Mark's question regarding the 75%. And one of the things you might make a comment on from Mark's perspective, we need to make sure that if in fact he's trying to hit that 75% threshold with a bonus or any other kind of pay, that it needs to be made to people who are under $100,000, because no matter what you do, if you've already accounted for people who are over $100,000, you've already maxed them out on the threshold, right?
That's correct. So you can only claim if you've got somebody that in your organization that earns more than 100,000 a year, you're limited to being able to identify their cash contribution or cash compensation as only that 15,008 and change, as I recall. Yeah. So yes, but as you see on the boxes, the only thing that they're asking you to illustrate is the cash compensation that you provide for those folks.
Okay, good. Gail posts a question here to Steve. I've been told from Gail, I've been told by my accountant that owner compensation cannot exceed 8 weeks worth of 2019 compensation, capped at, and she says the exact number, 15,385. Is that true?
Well, the 15,000, yeah, the 15,385 is correct and the owners are capped at that as well. So the maximum amount that any single person in the organization can get is that amount. But keep in mind, that's the cash compensation portion as well. So if they're, in addition to that, the employer can also calculate, the employer's portion of the sales tax, the employer's portion of retirement and healthcare and other payroll costs, sick leave, family leave, medical leave, vacation leave, etc. Yep.
Okay, so I'm gonna challenge you a little bit on the question that was asked earlier by Mark regarding the what happens. Let's kind of walk through a scenario where no matter how I count the payroll, I'm not hitting my 75% threshold for the payroll. So that in and of itself indicates that even if I have other expenses that are interest on mortgage or payments of those type, the other 25% category, that they are calibrated by being 25% of some number less than your loan amount, right? Because the payroll calibrates what your total forgivable amount is. Is that right?
Yeah. So the forgiveness, I'm trying to understand your question here. So the forgiveness allocation says of everything that is forgivable, right? No more than 25% of that can be non-payroll eligible expenses.
Correct.
Okay. So that's, again, I think that's why we recommend you go through the process and do it by starting with these tables, then moving to your Schedule A, because you're going to figure out your allowable payroll numbers first. And then that will form, your maximum forgiveness from the payroll standpoint. And then seems to me that will inform the total forgivable amount from the non-payroll expenses as well.
Yeah, well, I think maybe where Marquita's trying to go with it is, what if all of my payroll and all of the other non-forgivable things
That's
amount
exactly.
to 85%. And I've got, let's just say I got $100,000 in my PPP and I can only come up with $80,000 of forgivable stuff. Well, then the balance, that 20,000 turns into a loan with a 2-year amortization schedule and 1% interest. So you can turn it into that loan or give it back. You don't have to take it. You're just going to owe the 1% interest on the money for the time that you had it. But you also, the one thing that the PPP didn't do for companies is it didn't provide them with a lot of working capital or a lot of money for their working capital needs. That's got to come through the EIDL. So, I mean, there is a little bit of an opportunity, you know, rather than, I mean, pay bonuses if you want. If that's true, we'll try and double check, make sure we're right on that. But you know, if you got money left, it's cheap money. So, you know, and think about your long-term needs. You know, are you going to experience business slowdown? Are you going to experience receivables that might not be collectible before you just give basically almost free money back?
Exactly. That's exactly where I was going with that, Terry. And I think in addition to simply calculating the actual forgivable number, there's some strategy, perhaps, that if in fact you don't hit that 100% of your loan amount as a forgivable amount, there are some strategy options to consider relative to, do I convert that deficit amount into or leave it as a PPP loan under the structure of PPP, knowing that only 80% was forgivable and I've got this 20% amount that actually converts into a real live loan at some point in the future, versus do I look at an alternative to retire or pay off the PPP residual and not have it become a PPP loan and put it in another vehicle like an EIDL or a Main Street loan. And it really takes looking at the interest rate and the point at which those loans begin to amortize or begin to accrue interest.
The other problem, though, so far has been, you know, the EIDL, if you applied for the EIDL, it should be coming, but when? You know, that money has been very slow to move. And, you know, and another thing I would throw at you is we see bank credit tightening up quite a bit. So, you know, you have this money available to you. So don't
throw it away.
You may want to think twice before you give it back versus, you know, having to deal with a loan you know, a loan from the bank down the road.
So let me also interject here. You have to think about this is a loan. Okay. So first and foremost, what you received from the PPP is a loan, right? And that loan has 6 months of payments deferred and then 24 months thereafter. So you have a loan. You already have that loan. What you're actually applying for is to have some or all of that loan forgiven. Okay. So if you're only forgiven, let's say 80% of the loan value, which we're talking about in this example, you still have the 20% remaining of the loan. You don't have to do anything. You can continue to use that. And then those funds become unrestricted. You don't have to use them only for payroll or utilities. And the other part of that is there is no prepayment penalty on this loan, right? So you can, if you have other funds that are available to you or become available to you, you can pay it off at any time you want. But I think Terry makes an outstanding point. You know, it's 1% money on simple interest, and never in my lifetime or never in the lifetime of anybody on this call have we ever been able to borrow money at that rate before.
With a 6 month deferral.
Yeah. But it is a loan. It is a loan now. So you're really applying to have some or all of it forgiven. So you got to start from the premise that you took out a loan.
Okay, let's look at Mark's question. So Mark asks, if you will go back and review page 4, the first checkbox, very similar to the question that was just asked by Gail. This cap of 15,385, and very specifically where it says, the first checkbox states does not exceed 8 weeks worth of 2019 compensation for any owner, employee, or self-employed individual, generally our general partner, capped at 15,385. So is it correct, Steve, that this is referring to a partner who in 2019 perhaps made less than 100,000 and is now over 100,000? What does this really refer to?
Okay, this amount is capped at 15,385 for each individual, or the 8-week equivalent of their applicable compensation in 2019, whichever is lower.
Mm-hmm.
Yeah, it's pretty clear. So if
Mm-hmm.
their compensation in 2019 was lower than 100,000, they have to use the 2019, is the way I'm reading that.
Yeah.
But is that for?
This is just for the owner's compensation.
I was gonna say, is that just owner? I don't know, owner dash employee. So it's not owner slash employee. It's owner. So you're saying it applies only to the owner.
That's what it says. Any amounts paid to
Mm-hmm.
owners. Yep. Yep.
Mark's pushing every angle. So if
God bless him. We will be too.
Yeah, this is really interesting because I think that we're going to have opportunities to hire people. and oh God. The joke that we're laughing at that I think some of you don't see is that this Mark makes a comment that perhaps he can hire his wife as an employee and bonus the wife who didn't make anything last year and gets a bonus this year.
There you go.
Be careful. So they say, go with God.
Does this mean that interest for credit cards is not forgivable?
That's the way I'm reading it. It says only real or personal property.
All right.
That's a little different than they had in the law. If you remember reading the law, Terry, when we went through that 330-page document, they described it differently. But this is the way it's come out in the forgiveness.
As of right now, they may change it. You never know.
That's true.
Yeah.
We haven't seen any new guidance in 2 days, and that's been one of the longest periods since this whole process began.
Yeah, yeah. And another interesting thing that I'm picking up today on this, Steve, is I did not anticipate that long-term leases like copiers, other office equipment, trucks, you know, as you said, any kind of capital equipment that you may have either a lease or a capital payment on, a mortgage on. It's not a mortgage, but a payment on, would be counted.
Yeah, and Marquita, as you well know, I mean, what we see most often are things like leases and office equipment that's on a long-term lease for business owners.
Yeah.
So Christina asked what if you have the equipment on a credit card? I think then it's really going to boil down to documentation. Make sure, you should still have a copy of the lease to that piece of equipment. And then, so again, remember, Christina, I'm sure, just remember, if your loan's under $2 million, you're not going to get audited. So just have a good conversation with your bank. And again, I think if the money was spent in good faith, between you and your bank, you can figure out a forgivable amount. But the bank is the one that has to forgive it or give the blessing on it.
Yeah.
So
good. So as of now, we don't have any additional questions, which really surprises me. I thought we would be overwhelmed with questions on this one, and maybe we're all like deer in headlights right now because you did present an awful lot, Steve. And for me, I think my takeaway from this, and obviously I have seen the forms before, is that it's definitely more complex than I thought it was. I had put my own little spreadsheets together in anticipation of this, and there's more to calcing the boxes than I had anticipated. I thought it would be substantially more straightforward. So
yeah, so I just want to reemphasize and we're going to attach this to the replay on the IBA, what we'll call the scratch pad worksheet for you to use on this. you can see we've added a lot of additional boxes. So you'll have the ability here to make both FTE calculations and then determine the one that works best for you. And then we do all of the safe harbor calculations right along in the same row for each employee for you. And then it's sum totals on the bottom. So it's a hopefully it'll be a relatively handy and easy worksheet for you to do your pre-calculations before you fill out the application.
Very good.
Okay, great. Well, with that said, Steve, I think that many of our audience members are going to need to take what you presented, go away and chew on it a little bit, and then we may see some questions later.
Well, we'll be back next week. So
we'll be back next week. That's the answer. That's the right answer to that question. We'll be back to really, dig into it and chew it up a little more next week. With that said, I think I'm going to give Terry, you and Steve both an opportunity to make the last comment. Normally I go Terry first and Steve. Let's go the opposite direction. Steve, you want to make any last comments, and we'll give Terry the last word.
I think, again, I would just encourage you to run through the calculations and do a couple of different versions and make sure you're putting all the numbers in and taking the best advantage that you can of the program. But it is a good program. Hopefully it's been useful for you. And even if you don't get 100% loan forgiveness, keep in mind that it's incredibly cheap money. So stew on it. Have a great holiday weekend. And if you've got more questions, come back to us next week. We'll be here next week at the same time and be prepared to answer any questions that you have.
But next week, Steve, we do move back to Friday, right?
We do move back to Friday. Yes.
So we'll be here next week, Friday at 3 o'clock. Okay, Terry, you get the last word.
Hey, I think I would just say, don't be afraid to ask questions. Give us a call, shoot us an email. You got our contact information. And, the second thing, to reiterate what I said before, make sure you're working with your banker on this, because they are the one that has to give the blessing for the, on the form for the actual forgiveness. There is some gray areas on this. I had somebody talk to me about it earlier today that, like, well, I was told to do this at the beginning and now it's this, and now I'm not going to get forgiven. It's like, it's where I'd fall back on. I think if you spent the money to, the good intentions of the law, work it out with you and your bank. And if you're under 2 million, you're not going to get audited. So.
Hey, Terry, before you go, I'd love it if you'd relay the story, Stacy's story real quick to the end of this as well, about that tying into your banker's comments, because I think that's really important.
I was humbled this week by one of our clients in Washington State. She had been through our CEO to CEO program, and she was the very first client that their bank sent through on the PPP loan. And what we teach our clients in the CEO program is really two things that came glaringly evident in this whole COVID financial crisis is, one, you need to know your banker, and two, you need to have your financial statements in place. So when she went, she knew her banker personally, which she learned to do through the CEO program, and her financial statements were very clean and I like to call readable and relevant. And the bank was able to take them. They processed her loan just like that. She got all the money. It all worked out smooth. And on the backside, their bank listed their company as a featured business of the month. And where they're at in Washington State, they have a AAA baseball team. The AAA baseball team picked it up and listed their company on their website as a business of the month, and it exposed them to over 100,000 target clients. So pretty cool success story there.
Yeah. Open and clear communication pieces with your bank, right?
Yeah. So the two key things there that, I think we've said this on other webinars that have come out of this, you need to know who your banker is. I mean, I kind of chuckled on a couple of news reports where, people were saying it's supposed to be a first come, first serve, and, they're taking care of the people they know. Well, yeah, they probably did, but that's like, if you're a business owner, know your banker. And you've got to have clean financial statements. I mean, I remember one client I was working with at the beginning of this, he didn't even have his 2018 financial statements done or tax returns. It's like, I can't help you. If can't help you if you can't help yourself. So I don't want that to sound harsh, but I don't know if I want to end on that note. You got to have clean.
Well, let's give a minute. We've got 3:50 here, and Steve just sent in a couple questions. This is not Steve Denny, but a different Steve, our participant Steve, and he asked 2 questions. How long after the 8 weeks, which is how long after your start period of loan disbursement or beginning of your alternative period, do you have to request forgiveness?
So there's no date that I'm aware of that says you have to ask for forgiveness within a certain period after the end of that 56-day covered period, if you will. But I would say that you want to do it obviously the sooner the better, because there is interest associated with this loan that you are on the hook for. So you want to get that forgiveness in place as soon as you can to reduce the overall interest charge that is affecting the loan if all of your loan proceeds are not forgiven. It's in your best interest to do it sooner rather than later.
Mm-hmm. And then his second question is, do you think the increase in minimum wage will help us get to the 75%? So apparently he's already kind of calced in his head that he's not going to hit the 75, and he's looking for alternatives. And it depends. Go ahead, Steve. Tell us what your answer is on that.
No, I agree with you. It does depend. It does depend. And if you've got a lot of part-time people, and I just keep harking back to the whole purpose of the Paycheck Protection Program was to keep people off of unemployment. So I know there were a lot of business owners that said, I'm not going to provide a paycheck for somebody that's not working. But frankly, that was the whole point of the program, and the federal government was going to cover that expense for you, as we're seeing in this loan application. So, I think that we also have several clients that did provide bonuses because their people had to work in pandemic conditions, and they could make a very strong argument that having to work under those stressful situations demanded, some special pay. So the bankers that we've talked to have all said that sounded reasonable to them. And, I think that, again, if you fill out your application right and you've got all the documentation, I think you're going to sail right through the forgiveness period, just like those that went into the application with all their information correct and their financial statements in hand.
Okay. So with that said, I'm going to just remind everyone that, as always, we will have the information that you saw today posted on our YouTube channel, the recording of the webinar, the actual handout, the PowerPoint that Steve used to present, and the Excel spreadsheet, right, Steve? You're going to put that out on the YouTube channel, right?
Yes, we will. And we'll also provide the highlighted copies of the PPP loan forgiveness instruction sheets that we had used on this webinar as well.
Okay, great. So with that said, I think that's the last word. Steve, you got the last word. So thanks everyone for participating. We'll see you next week.
Have a great weekend.
Thank you, Marquita.
And a great Memorial Day.